Okay, MegaWhale team, welcome back to the channel and thank you for tuning in. I hope you're all having a fantastic day today. The weekly candle has just closed for Bitcoin and we're going to be taking a look at what this weekly candle close means for the short term and for the macro charts. Is this close enough to confirm that Bitcoin is bullish and going to continue higher, or is it not quite there yet? We are going to be going over the weekly from a technical and a structural perspective, the 2-week chart and the monthly charts, as well as discussing the most important consolidation right now, which will determine the direction of the macro price action, that being our 8-day consolidation between 86 and 83. Before we get into the rest of the video, guys, make sure to smash that like button, hit that comment button, and subscribe to the channel. We post daily videos for Bitcoin focusing on the facts, the data, the technical, and the structural information. By the end of today's video, you'll have a detailed and well-rounded understanding of not only the macro price action, but the short-term charts as well. If you were interested in more of this kind of content, you can join us on Telegram. This is the first link down below. You'll get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop of cryptocurrency with Bitcoin and the relevant economic news. And if you were interested in joining our VIP channel, you can do that by clicking the pinned comment of the free channel, contact our admin by clicking this name, view a 50+ month trading track record, or check out a 10-minute video showing you inside the VIP channel. You'll get access to 2 main channels. The primary VIP group, where we post trading setups with exact entries, targets, and stop losses, trade justification, and exclusive analysis, including access to a multitude of group chats from the general chat to the trading chart and education chat to the help chat to our daily video chat, and of course the community trade setup chat. Go ahead and check it out, guys. Join over 700 members and we will see you in there. Let's jump into the content. Taking a look at the price action, guys, over the last 8 or so days, Bitcoin has been consolidating aggressively sideways between the range of 83 to 86,000. And as we discussed in yesterday's video, this consolidation range here is going to have a massive impact on the direction of the macro price action, as the measured move target for the breakout takes us to 89,000, which is a critical high time frame resistance we'll discuss in a second, and the breakdown takes us into that sub $80,000 region, which will facilitate a loss of that 2-week Gaussian 2-week baseline of the Ichimoku cloud and daily Gaussian channel. In layman terms, a break below the range low or a break above the range high will both have significant and profound impacts on the probabilities for either macro reversals or macro continuations down. So this is a very important range. And we can see it's so important here because the price action is very indecisive in regards to where it wants to move. Hence, we are just seeing this sideways chop. In most recent news, we have seen that weekly candle close. It closed around 5 minutes ago. By the time you're watching this, maybe about an hour ago. The weekly candle close itself facilitated a break of the weekly downtrend, which is a good sign, and a positive momentum shift on the RSI. However, when we are watching for confirmation of reversals, we need to see more than this. We need to now also see a break of these prior lower highs, something we'll be discussing later in today's video. But simply put, that is going to be that 89,000 horizontal resistance. Prior support becomes future resistance. Simply, the weekly close has shifted the probabilities in favor of a move to 89,000, but does not change the probabilities of a break of 89,000. We'll discuss that in today's video as well. As we mentioned in the intro, we are also going to be taking a look at things like the monthly chart, going over a monthly indicator, which is a warning sign, the 2-week chart, which is something we need to be paying very close attention to, and of course our weekly technical levels. So let's start on the market data, 24-hour volume and liquidations. Volume up 21%, 144 billion. Liquidations up 66%, 162 million. Mostly split pretty evenly between longs and shorts here, as Bitcoin is still very much consolidating sideways. Moving over to the DXY is still dropping toward the downside, and as expected, we do expect this continuation to occur over the course of the next 6 to 12 months. We are expecting the DXY to drop potentially as low as 92 to 93. The S&P 500 is not looking fantastic. we can still see here on the weekly chart and on the daily chart, we have created a very clear lower high pattern. We've got these highs, we've got these lower highs, we've got these lower highs developing. So until we break one of these lower highs and establish a uptrend here, it is unlikely we're going to see any sort of higher time frame reversal. In fact, we rejected perfectly from that break of structure. Prior support becomes future resistance. We are sitting underneath that region, and there is no expectation for the S&P 500 to continue through this area unless we actually break that resistance. Until then, the expectations are going to be still downward. So not quite yet bullish on the S&P 500, but we are watching very closely at that break of structure at 5,500, as a break of 5,500 may lead to a high time frame reversal up into around 5,800. Until that happens, expectations are still going to be toward the downside. So keeping that in mind. Let's go ahead, guys, and jump into Bitcoin. Now, before we do, if you were interested in supporting the content and supporting yourself in your trading journey, sign up to BitGet, BitUnix, or BingX with the links down below. These are the exclusive exchange links. These are exchanges I trust and I daily trade on. You'll get a lifetime trading fee discount of 15%, which can build up to 45% based on your trading volume. So check it out. The links are down below. Support the channel and support yourself. We'll see you back in just a moment. If you are looking for a new exchange or just want to support the channel, sign up to BitUnix with the link down below. You'll get a lifetime trading fee discount of 15%, which can build up to 45% based on your trading volume, as well as access to a bonus reward center, and of course, all of the exclusive campaigns we run on this exchange. You'll also get access to BitUnix being a non-KYC exchange, meaning you can sign up from anywhere in the globe without regulations. And most importantly, I only promote exchanges I trust and I use. As you can see, I trade on BitUnix very regularly, being the highest VIP level with over $500 million in trading volume for the last 30 days. And lastly, if you were interested in signing up to our other two exchanges, BingX or BitGet, you can also do that via the links down below. You as well will get the 15% trading fee discount and everything else that comes with it. Go ahead and sign up. Thank you for supporting. Let's jump back in. Okay, legends, let's go ahead and jump back into the content. So taking a look at the weekly candle close. A lot of people are probably wondering, well, is this a bullish close? Is Bitcoin bullish? What are we expecting now? Is Bitcoin going to continue up? We're going to answer all that now. So let's jump into it. The weekly candle close itself, if we're looking at it objectively from the candle perspective, it was a green candle, of course, but we really need to see this prior weekly high being engulfed, and that is sitting around 86,000. We're looking at the weekly chart, our prior weekly high is sitting around 86,000. So in terms of where we closed that from a structural perspective, from a horizontal perspective, it wasn't the best close. In fact, we saw the weekly price push up into the $86,000 region, but we have since rejected. Now, that $86,000 region we've marked out here and the weekly low marked out by 83,000 actually go to make up the range high and the range low of this horizontal consolidation. And we'll come back to this in a second, but it really stresses the significance of that short-term consolidation in directional probabilities for continuations into this next resistance or potentially below that weekly low and a correction back into that Gaussian channel. So in terms of the weekly close was more bullish than bearish, of course, but it is not enough to, I guess, confirm the fact that the buyers are back in control. What we are seeing here is we are seeing a slow shift into the buyers. We're seeing momentum slowly push back upwards, as we are seeing here with a positive momentum shift. We are seeing the trend weaken to the point at which the trend is now broken. This weekly downtrend has broken, which facilitates the potential for the buyers to now establish a new uptrend. But what we really need to see for a proper reversal is we need to see prior lower highs taken out and flipped into support. We need to see these prior levels of strong resistance turn into support. So taking a look at this, we of course have got this major level of resistance, 89,000 prior support, future resistance. Until we break above 89,000 and facilitate a support resistance flip, it is not likely Bitcoin's going to move into 98, into 100,000, etc., etc. If we break through this region, it is likely we will continue up into those levels. The weekly close has facilitated a scenario which will give a greater probability that Bitcoin is now going to break toward the upside of this horizontal consolidation and move into 89,000. Moving into 89,000, retesting this level of support again, opens up the potential for this move, but does not confirm it until only after we have broken above. So what have we seen here? In terms of the weekly close, we have seen a step in the right direction. This has not only now resulted in a positive momentum shift and a trend break, potentially now, which could kickstart a trend reversal, but of course we have continued to defend the 50 EMA, we have continued to defend the Gaussian channel upper band, and we of course on the 2 week have continued to defend the baseline of the Ichimoku cloud. So for another week, we have avoided potential disaster because we know already if those levels break down, those triggers are going to result in a higher time frame extended correction. So this all brings us back to this range, this weekly range between 83 and 86,000. The reason why it keeps bringing us back to this range is because this is going to be the horizontal consolidation which has developed essentially through that weekly downtrend. But most importantly, it is going to be the local high and local low of the price action, after which we have broken through the downtrend, which has the potential to facilitate a directional move into that horizontal resistance at 89,000 or potentially below 80,000, which will result in a break into the Gaussian channel on the weekly, which we know to be a trigger point for a macro correction lower. So let's talk about this now, because this is really the most important. Even in fact, I would say this, what happens here, is more important than the weekly close, because this is actionable information. This is a chart here where if we break through, we know where the price action is more likely to go. It's actionable, it's not speculative. So when we're taking a look at this consolidation range here, applying a measured move from the range high to the range low, applying that to the breakout point, we can see that takes us well into the $89,000 level, expecting a upward target of 89,000 if this horizontal range breaks toward the upside. And toward the downside, that can see a breakdown underneath $80,000, again breaking into that weekly Gaussian channel. So we've got a very crucial breakdown target and a very crucial break up target for the break of this horizontal consolidation. Now, in terms of horizontal consolidations, the probabilities are more or less neutral, but they are slightly now shifted in favor of the directional upward break as a consequence of the weekly momentum beginning to shift positive and the price action breaking out of its weekly downtrend, coupled with the fact that the direction of which the price action breaks into a horizontal consolidation over here is generally the direction of which we exit. Now, this isn't a statistical probability massively in favor of a move toward the upside, but it is slightly skewed toward the upside. And that does mean we need to still be aware of the potential downward direction and upward direction, because until these horizontal highs or lows break, we don't actually have confirmation the price action will continue that direction. Until then, it is likely we continue to chop toward the sideways direction. So let's take a look now at the higher time frame charts and discuss the breakdown and break up targets. If we were to look at this weekly chart again, we can see the Gaussian channel upper band is now pushing into the $80,000 region. And of course, we know the $80,000 level is going to be broken if we lose the 83 horizontal weekly low, and we know the $89,000 level is going to be tested if we break above the $86,000 high. So we can see the significant levels right over here. If we break through 89,000, it is highly likely we continue into 96, potentially into $100,000, confirming a reversal and confirming this to be the bottom. Until then, this is not a confirmed bottom, as we have not cleared through even our weekly lower highs. Therefore, if we break below 83,000, thus dropping below 80,000, we run the risk of breaking into the Gaussian channel on the weekly, and a break into the Gaussian channel on the weekly will do two other things. It will result in a loss of the 50 EMA on the weekly, and it will result in a loss of the baseline on the weekly. Both of these indicators we have essentially remained above through the entirety of the bull run, and if we do drop below these indicators, we may very well see a major shift in the macro direction toward the downside into these prior levels of liquidity at 55,000. Both on the 2 week and on the weekly, these $55,000 to $52,000 levels look to be realistic targets if these trigger points are lost. So at the moment, what are we seeing? We are seeing compression between the horizontal level at 89 and the uptrending level of the Gaussian channel upper band. And this compression is going to continue. So we are going to make a directional move up. We are going to make a strong directional move toward the downside. Either way is going to be highly, highly influenced by the direction of which the horizontal price action here breaks through the range high or range low. So you can see the profound implications this horizontal channel has, because it really opens up the potential for stronger directional continuations down, or even a proper high time frame reversal through the break of 89,000. So that is it, guys. The weekly candle close has occurred. I do not look at this weekly candle close to be of massive significance, particularly because we are still underneath 89,000. The weekly close right over here was more important as we were testing 89,000. Over here, we are now under 89,000. So even though we have seen the weekly close, the best case scenario is we push into 89,000, and that is still going to be an area now of resistance that we need to clear. So overall, that is what I'm watching. If we're looking at the high time frame charts, there are some warning signs that have popped up. We need to be aware of this one. Again, the indicator that has 100% success rate on the macro on the monthly at the moment has just printed another sell signal. This historically has resulted in corrections of 20% and up. We have seen corrections of 60%, 30%, 25%, 23%, but mostly 20% and up historically every single time it does print. So again, this isn't to say we are going to see a correction again. No indicator will have a 100% accuracy rate over a period of time. Eventually, it is going to fail, but it is something to consider in the back of your mind. Historically, when we see this indicator print, we generally see whether it be just a singular month correction or a multi-month correction of 20% and up. So far, since this indicator printed, we saw around a 9.8% correction, and a 20% correction takes us well and truly underneath all of those major indicators, whether it be the Gaussian channel upper band, whether it be the 2-week Ichimoku cloud baseline, or whether it be the 50 EMA on the weekly. So that is it, guys. Pay very close attention to this horizontal consolidation. The probabilities are slightly in favor of a continuation up. If we do get that break toward the upside, well, 89,000 is going to be that very clear and very obvious next target. If we reach 89,000, we are then watching for either rejections or the ability to sustain above there on the weekly and at least on the daily. If we see the consolidation break toward the downside, well, it is likely this entire rally will crumble and we will see a steeper and more aggressive correction. Moving very briefly to the total market caps, on the weekly for the total market cap and the total altcoin market cap, we are seeing some good signs here. And again, this is why we should be slightly optimistic now. We are seeing the buyers slowly step back in. We are seeing the control of the sellers slowly fade away. That is what we're seeing. We're seeing this total market cap here. We're seeing the weekly open above this downtrend here for the total market cap, and for the altcoin market cap, we just adjust this trend line to fit again. It is looking like we have also seen that weekly open back above this trend line, both of which are sitting above the 50 EMA. So we do have a chance for a reversal here. The sellers are definitely weakening, and that has been the case ever since we saw that 90-day tariff pause. We have to be aware that that tariff pause massively and dramatically shifted the perceived systematic risk in the market. So any kind of news surrounding tariffs, any kind of news surrounding future projections of interest rates may influence the market in a specific direction. But until then, it does look like the market is trying to push upwards, but it just isn't quite there yet to be confident that we're going to see stronger, higher time frame reversals to 100,000, to high 90,000s. We need a breakthrough at 89,000 level. And until then, we should continue to trade level by level, be aware of the triggers on the short term, which will facilitate these moves. And most importantly, be aware of the worst case scenarios and what needs to happen for those worst case scenarios to activate, so when they do, you're not sitting there, confused. If we drop below the weekly Gaussian channel, if we drop below the 50 EMA, we run the risk of these steeper corrections, and you don't want to see that happen and be sitting around saying what to do next, what is going to happen, because the market is at risk of larger corrections if we see that. So thank you for tuning in. Have a fantastic rest of your day. I hope everyone's had a great Easter weekend, and I'll catch you guys in tomorrow's video. See you then.